Coming up on the SBS On The Money podcast, what the RBA has to say about the war in the Middle East and the impact on petrol prices and inflation. Plus, we speak with the CEO of Life360. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Tuesday, the 3rd of March 2026, a day where the Australian share market fell, the S&P ASX 200 down 1.3%. We'll have the details with Cameron Gleeson from Betashares in a few moments, including what he's telling his clients. And later I'll speak with the CEO of location sharing app Life360, Lauren Antonoff, to find out what the company is doing with AI. But first, the Reserve Bank Governor Michele Bullock says it's early days, but that the immediate reaction from financial markets following the escalation of tension in the Middle East have been pretty orderly. Even the jump in the oil price, she said, was to be expected after surging more than 10% amid fears of a cut to supply, given many tankers need to flow through the Strait of Hormuz, which is effectively inactive for now. Motorists, though, will likely feel this at the bowser. Chief economist at AMP, Shane Oliver, says, roughly speaking, a $1 rise in the oil price adds around a cent per litre to petrol prices. But they've been rising even ahead of the escalating tensions. The Australian Institute of Petroleum says the national average for a litre of unleaded climbed 10 cents last week to $1.81. And that follows it being trading at multi-year lows. Now, given Australia is a net importer of oil, a disruption to supply can impact inflation, but the impact isn't so straightforward. Here is some of what Michele Bullock, the RBA Governor, had to say at a financial review summit earlier today.
The first point to make, I guess, is that it's very early days. We don't know what exactly is going to happen. The markets so far have, yes, there's been some oil prices have risen, gas prices have risen, as you'd expect. There has been, yields have moved a little bit. There's been a bit of movement in expectations about what central banks might do with monetary policy, but basically it's been pretty orderly. Equity markets have reacted as you might have expected. So that's all been pretty orderly. Last year we've been doing conceptual thinking about what might happen if there is prolonged increase in energy prices. You'll recall last year when there was the 12-day Israel-Iran conflict, and at the time we, along with many others, were thinking conceptually about how that might particularly impact Australia. And again, it's complex. On the one hand, we're a net energy exporter, so energy prices rising might assist us. It might assist our terms of trade. That might be positive for us in terms of income. But on the other hand, we're a net importer of oil, which obviously has big implications for inflation, particularly for headline inflation and what people see at the pump. The other possibility is that if this is a very prolonged conflict and there is a very, very elevated and lengthy rise in energy prices, this ultimately is going to feed through into economic activity. And I think uncertainty, if people are paying more for their petrol, they've got less money to spend on other things, this might impact consumption. If businesses are uncertain, that might impact investment. So all these things might impact the economy. So at the same time as there's potentially a inflationary impact, there's also potentially, if a very elongated conflict, there's also the potential for it to be impacting economic activity, not just here but around the world. So it's not 100% clear in our case. And one thing that I think we are doing is we've done a lot of conceptual work here now. I think we'll be doing more work on particular scenarios. I talked a little bit about, you'll recall in May we published a scenario when the trade war was looking quite bad, but this might be an opportunity now, and I think we will take the opportunity now to think about some scenarios around energy prices and the war.
That is Reserve Bank Governor Michele Bullock speaking earlier today at a financial review summit. Let's take a closer look at the implications for the share market. Interestingly, that oil price, Brent crude, surged 10% yesterday, and today it added almost another 3% compared with this time yesterday. So unsurprisingly, energy producers, some of the best performing on the market today, especially coal companies. Coal companies seeing their shares rising the most in 3 years. The broader ASX 200 down 1.3% to 9,077. Qantas off by 1.8%, the lowest since May. Winners, though, included Magellan Financial shares surging 22% after completing a funding round for its merger with Barrenjoey. But the focus today continues to be that impact of the war in the Middle East. For more, I spoke with Betashares senior investment strategist Cameron Gleeson. So, Cameron, the RBA Governor Michele Bullock said today that financial market reaction to the Middle East conflict and the escalation has been, quote, pretty orderly. Would you agree?
Look, I think the price reaction, especially within the first sort of 24 hours after the weekend, could be described as relatively orderly. We had the sort of typical sort of knee-jerk reactions, a flight to safety. The US dollar appreciated against most other trading currencies. We saw gold. Oil was up. There was a lot of talk about the risk of oil going to 100 US dollars. It's up to about 80 US dollars a barrel. So not as far as some were potentially fearing on day one. And then the US equity market was basically flat for the day. Obviously, Iran was a risk, but it was countered by strong manufacturing data domestically. I will say, though, going into sort of day two, trading day two, we have seen sort of further sell-off in the Australian equity market and in the Asian equity market, more news reports about disruptions to oil infrastructure in the Middle East. So we definitely need to keep an eye on this to see whether it sort of devolves any further.
While we need to keep an eye on it, we've kind of seen this sort of stuff before, especially threats of passage through that Strait of Hormuz where oil and gas tankers flow through. But does it feel any different to you this time around? And to what extent are you concerned?
I think it is different. The scope of both the attacks and the retaliation are very different to, for example, the 12-day war that we saw the US and Israel attack Iran about June last year. That was very much contained around air defenses and nuclear-related facilities. And the response was forewarned by Iran in terms of missiles sent towards Israel. The response this time, well, firstly, Israel and the US are essentially trying to eliminate the leadership within Iran, both in the government and military. They also obviously have gone after a far wider range of targets. And then the response is unprecedented in terms of Iran attacking the financial centers of Dubai, Abu Dhabi, attacking oil infrastructure, even attacking a country like Oman, who was really, helping to broker, some sort of peace negotiation between the US. So that broad-based response speaks of the fact that it is really an existential threat for the Iranian regime. And then we sort of start to think, well, this time could be different. We already know that effectively the Strait of Hormuz has been blockaded. Tankers are anchored either side of that strait. They're not passing through. They can't get insurance. Kuwait has seen its LNG production facilities attacked, and they've shut down production. And Qatar, sorry, I should say Qatar, very significant producer of LNG, and that's going to be important for gas importers in areas like Asia and Europe. So I certainly think it is something which should be considered more seriously than some previous flare-ups. And we need to wait to see how this plays out. But, the ramifications, are pretty substantive for the global economy if this drags on and if we see, the supply of oil and gas significantly disrupted for a period of time.
I think Qatar produces around 20% of the world's LNG. Australia is the third largest producer, and we're a net exporter of LNG. But I think the way it's going to impact us is as an oil importer, because we need all of that basically for petrol. So it'll impact consumers in terms of the petrol price. Will it mean?
Yeah, that's right.
What will it mean?
And I should say also, just also for Australia, it's worth pointing out that for our LNG prices are not benchmarked off global LNG prices; they're benchmarked off the oil price. So, from a petroleum a resource rent tax. We will get a slight uptick and slightly more dollars flowing into Australia due to the slight increase in the oil price, but we won't, if you like, get the full windfall of the fact that in Europe right now, the LNG prices are up by nearly 50%. So it's a slightly different sort of mechanism by which Australia earns export dollars from LNG.
What about the impact to inflation and interest rates? The US is meant to be on a path lower. Here, we've got inflationary pressures anyway persisting, so the market's pricing in a rate hike. But then we've got these other issues. So what's the market now thinking?
Yeah, so in the US, if you go back sort of a couple of weeks, the first rate cut that was priced in there was supposed to come in about June. That's now been pushed out, and there's about a 50-50 chance of a rate cut in the US. In Australia, we're of course expecting rate hikes this year. And originally the first rate hike was fully priced in for around about June as well, but that's been brought forward a couple of months now. So it means it's a delay in cuts in the US, a acceleration of hikes in Australia likely if this persists more than a couple of weeks, if inflation feeds in, if higher oil prices feed into higher energy prices feed into inflation. And that also creates obviously tensions and puts pressure on equity markets, where stocks that either trade off high valuations or that have performed quite strongly start to come under pressure through higher bond yields and higher interest rates.
Okay, let's shift gears for a moment if we can. We've got the stragglers now when it comes to reporting season here. Life360, one of the final ones reporting today. I'm speaking with its CEO in the podcast today too. How would you describe reporting season in general?
Yeah, so Life360, I think they're reporting their first ever profit, slightly above expectations, and unfortunately the share price is off. And it's a bit of a story of the reporting season, really. You can really delineate the reporting season by sectors, and the miners, materials sector performed very strongly. Financials have performed very well, and we've seen upgrades in those sectors to earnings. But then if we look at consumer discretionary stocks, be it Temple & Webster or Wesfarmers, we saw their share prices come under pressure due to concerns around inflation and the potential for rate hikes and what that might do to the Australian consumer. And then finally, the real talking point was the IT sector in Australia, where we've seen these either slight misses or in some cases beats, but generally reasonable earnings growth out of IT stocks or IT-related stocks. So if we think Pro Medicus or, for example, REA Group, and the share prices of the stocks have fallen dramatically as a result. Part of that is obviously not quite meeting these high expectations, but a lot of it is a general negative sentiment, which is fed globally out of concern around the pressure that AI might be placing on enterprise software. Whether that's overdone or not, we'll wait to see. But we are seeing significant buying of Australian technology, and we have an Australian technology ETF, which is indeed seeing a lot of investor support this last week.
Okay, and wrapping up, what are you telling your clients right now? Where do you see the opportunities for investors?
I think it's important to stay the course, to realize that these risks, while right now we're certainly at the start of the conflict, the fog of war is potentially at its thickest. You want to remain balanced in terms of an overall portfolio. We think that the overall landscape for economic growth remains strong. Global economic growth remains strong. We think investors should look to diversify outside the US, look for areas of markets in Europe and Japan that do have strong fundamentals and cheap valuations, but you need to hedge your risk, and holding things like high quality fixed rate bonds, which pay a good pickup, a good rate of return over cash now, as well as other hedges like gold, will stand you in good stead for periods of volatility, but also for periods where the market is more benign. And we're seeing, certainly a lot of investors keen to adopt that sort of diversified approach to portfolios in 2026.
That is Cameron Gleeson there from Betashares. Okay, he mentioned Life360 earlier. Let's take a closer look at its results. The location sharing app delivering its first profit, with net income rising from a loss of around $4.6 million to a profit of $151 million for the full year. The company is most known for its app targeted at families to allow parents to know where their kids or their parents are. It's heavily investing in technology and AI. And to find out more, I spoke with its CEO, Lauren Antonoff.
We've had great continued execution. This is our first year of positive net income with over 32 million, not counting the one-time non-cash tax benefit. So this has been great continued execution. We're really proud of it.
I want to focus a bit of time on AI if I can. How will you or how will the organization use AI? I speak to a lot of CEOs who say it improves productivity, and they often give me some broad, answer about the use of AI without getting any real life examples. What can you give me? How are you and how will you use AI?
Yeah. Well, AI is increasing productivity, but I'll give you an example of what I mean by that. Typically, in an engineering team, you have engineers who write the code, you have product managers who are designing the features, you have designers who design those interactions and do the UI. We're starting to see each of those disciplines be able to take forward their ideas more independently, so each of them can get further along before they come together and compare notes. So engineers are starting to be able to envision what the product should do and what the product should look like, and actually bring something working to the forefront for their peers to give feedback. I think some of the most exciting work I've seen is designers actually taking their ideas, and instead of drawing pictures, they're building working code that brings their ideas to life. And all of that is letting us execute and deliver products and services faster to our customers.
Speaking of those products and services and what AI means to future growth, you're a luggage tracking business, a family tracking business. Now you're doing pets. So what's next? Where will the next phase of growth come from?
Yeah. The next phase of growth is a continuation of what we're doing by bringing families closer and helping them stay connected and safe. We're very early in a lot of the business that you mentioned. We're early in advertising. That's certainly a source of growth. We're very early in the pet tracking business. And we've already started to talk about start caring for the next generation, being able to serve aging family members as well as kids.
Given that family tracking is, I guess, the core part of the business, trust is at the center of families, and trust is at the center of your business. So how do you gain and maintain that trust when it comes to protecting that all-important data?
Our mantra has always been members before metrics, that we put our members first and make sure that we're making decisions in the business and what we build that's in our members' interests. So as we're leading into things like advertising, we're thinking both about the value that we deliver to our members. How do we provide relevant ads, and how do we do it in a way that is protecting their data and keeping that data within our walled garden? And we're thinking about how do we increase transparency? How do we do that in a way that really is best in class in terms of making sure that customers have control over their data, what's shared with their family, what's shared with advertisers. And so we're looking at all of those facets and investing to make sure we're at the forefront of trust.
We were talking earlier about AI and how that's changing quite dramatically, but doesn't AI make digital life more confusing to some aspects for parents especially? And by that, doesn't it mean that, generative AI makes it easier to fake voices, messages, identities? What do you see as your role in protecting the consumer there?
Yeah. I think we're just starting to understand the impacts that AI has, and both the benefits and the risk that it brings. And, our job is to keep families safe and connected. And what that means over the next 2, 3, 4, 5 years is unfolding rapidly. And so it's our job to understand the technology, understand those risks, and help design solutions that put the right tools in the hands of parents and kids, frankly, to be able to navigate those shifts.
The one side of AI we haven't spoken about is AI investment, money-wise, right? How do you balance those concerns we've seen in the industry over an over-investment in technology, particularly AI, while ensuring shareholder returns?
Yeah. We start with a member at the center of everything we do. We think about what are the things that we need to do in order to serve our members well, and we let that guide us.
And so finally, just one thing on the global economy. Obviously, we've seen these a re-escalation of tensions in the Middle East. To what extent do these types of geopolitical issues impact your business? And what does it mean for your bottom line, if anything?
Life360 was born out of an emergency, was born out of Hurricane Katrina and the need to keep families safe and connected. And so we like to think that our services are particularly useful at families going through hard times. Our job is to make sure that families have the tools they need to find each other and to care for each other in moments of need.
That is the CEO of Life360, the location sharing app, Lauren Antonoff. And she wraps up the podcast for this Tuesday. If you enjoy it, give it a rating or review on Apple Podcasts and Spotify. Click subscribe, and we'll chat tomorrow. This SBS On The Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.